Good afternoon and welcome to BizTech's Asian Midday Market Watch. I'm your host, Jeffrey Halley, and it's Wednesday, the 28th of February. Our guest today is Teng, an independent market analyst based in Auckland, New Zealand. Tina, once again, welcome to the show.
Hi, Jeff. Nice to have me again.
Before we speak to Tina, let's have a look at the performance of markets around Asia today. It's a bit of a mostly down day with the exception of South Korea. The Nikkei 225 is down 0.13%. Shanghai has retreated by 0.75%. Hong Kong's Hang Seng is down 0.14%. The ASX 200 in Sydney is down 0.13%, while it looks like some bargain hunters have come in and lifted the South Korean Kospi up by 1% today. Singapore is down 0.32%, with Kuala Lumpur falling by 0.51%. Tina, what's your take on the market price movements today?
So Wall Street rally stalls in the recent days, especially last night. The Wall Street closed in a mixed note. I think the current rallying momentum may face some headwinds ahead of the key inflation data, the PCE, coming out on Friday night. So I do think that the market now is overbought, and indicators that fear and greed indicator tends to extreme greed, which means there might be facing a pullback risk.
Right, and I guess with the Wall Street has had a sort of a pretty choppy range trading sideways market this week as well, and we've seen US bond yields rise as well. Do you think the markets are getting increasingly nervous in the United States about this PCE, this personal consumption expenditure data that the Fed watches so closely?
I do think that the Fed actually, they focus more on the headline CPI, not really the PCE in the last 2 years. However, overnight, the economic front is not rosy because the U.S. consumer confidence fell to the lowest fell for the first time in 3 months. And also there's another data, so that durable goods orders also fell the lowest in a few years. I think just to the interest rate trajectory, markets are cautious for the current tech-led rally. There might be retreat soon. However, we still need to see the upcoming data.
Right. Now, we're both Kiwis and we both have mortgages in New Zealand, and the Reserve Bank of New Zealand announced its latest rate decision today, leaving rates unchanged and seemingly pushing back on hopes, I should say, that there would be any rate cuts before they previously signalled 2025. What's your thoughts on today's rate decision?
So the decision was much expected. However, I think statement is slightly dovish than previously projected. That's why I can see New Zealand, the major rates like swap rates have dropped significantly, pricing down the New Zealand dollar, and same time actually buy out the New Zealand stock markets. And New Zealand, the NZ50 actually it's one of the most strongest markets in the Asian session today.
Okay, let's turn our attention to energy markets now. Another massive number crude inventory build in the United States last night, up 8.4 million barrels, and I think that followed a jump of around 7.5 million barrels last week. Despite that, and despite these talk of slowing demand in the international economy, etc., oil still remains fairly well anchored around, well, Brent crude around that $80 per barrel level. What are your thoughts on the oil markets here right now?
So this week, there is a news that the EU diesel demand has increased. At the same time, it is expected, even though the oil inventory has risen this week in the US, however, the refinery capacity is reducing. I think that's the temporary factor that push up the oil price. But also we need to look into the upcoming China manufacturing PMI data. If China's economic recovery now is getting better or not, however, I think it will be still like a bumpy journey.
And speaking about that China PMI data, I mean, the stock market rally that the Chinese government's trying to engineer seems to have seems to have lost a bit of momentum this week. And we see headlines that Country Garden has been slapped with a winding up petition in Hong Kong today. Do you think that non-manufacturing and manufacturing purchasing manager index data could move the needle as far as Chinese equities go?
I don't think the manufacturing PMI is a major factor for the Chinese stock market's trajectory, but I do think the property issues remains a problem for the China economy. That's really matters consumer confidence, investment, business confidence. I think there's also a debt problem, and there could be like a repercussion on the global market at the same time. So with that, I think we just need to really closely watch the policy path of the Chinese government on how this property issue would go ahead.
Great stuff. Tina, thank you so much for speaking to us today.
Thank you, Jeff.
I'm Jeffrey Halley, and we've been speaking to Tina Teng, independent market analyst in Auckland, New Zealand, on BizTech's Asian Midday Market Watch. This video and podcast will be available on our website, www.biztech.asia, our social media platforms, as well as our syndication partners, TV, radio stations, and websites. Please like and subscribe to our various platforms. Thanks so much for tuning in today.